Hello and welcome back to Riddle of Truth, the channel where we dissect the most compelling questions of our time. Today we're tackling a topic that divides experts and ignites passionate debate. What will the price of one Bitcoin be in the year 2030? The forecasts are staggering, ranging from seven-figure fortunes to a complete collapse to zero. It's a high-stakes guessing game played by some of the brightest minds in finance, technology, and economics. Who is predicting what and why? In this documentary, we'll explore the entire spectrum of possibilities. We'll hear from the ultra-bulls who see Bitcoin reaching millions, the cautious optimists who predict steady growth, and the staunch bears who warn of an impending crash. We will dissect their arguments, examine their evidence, and synthesize what seems most plausible for the dawn of the next decade. Strap in as we journey into the speculative heart of digital currency. Let's begin. We start with the most audacious predictions. A small but influential group of tech visionaries and investors believe Bitcoin is not just an asset, but a revolution in the making, with a price target that stretches into the millions of dollars by 2030. Leading the charge is Cathie Wood, the CEO of ARK Invest, a firm renowned for its bold bets on disruptive technologies. ARK was an early and vocal supporter of Bitcoin, and their analysis reflects a deep conviction in its long-term potential. ARK's research, led by analyst Yacine El-Mandra, outlines several scenarios. Their base case, a sort of middle ground expectation, projects Bitcoin could reach approximately $710,000 per coin by the year 2030, based on a sum of its potential use cases. But their optimism doesn't stop there. ARK's initial bull case saw a price of $1.5 million. Following the successful launch of Bitcoin ETFs in 2024, Cathie Wood raised her outlook even higher, suggesting Bitcoin could soar to an incredible $3.8 million by 2030. What fuels this extraordinary number? Wood argues that if institutional investors, like pension funds and corporations, allocate just 5% of their portfolios to Bitcoin, it would add an extra $2.3 million to the price. The ETFs, she believes, are the regulated gateway for this tidal wave of capital. As the co-founder and CEO of Coinbase, one of the world's largest crypto exchanges, Brian Armstrong has a front-row seat to Bitcoin's evolution. Having been involved since 2010, his perspective is built on over a decade of direct experience. In a 2025 interview, Armstrong confidently predicted Bitcoin could reach $1 million per coin by 2030. He points to several powerful tailwinds creating a perfect storm for the asset's appreciation. Armstrong cites clearer crypto regulations in the U.S., the potential for nation-states to add Bitcoin to their strategic reserves, and a massive supply shock caused by institutional investors buying up a limited asset through ETFs. He believes this increased legitimacy and scarcity could multiply Bitcoin's price many times over. Representing the research arm of Fidelity, a $4 trillion asset management giant, is Jurrien Timmer, director of Global Macro. His analysis brings the rigor of traditional finance to the world of digital assets. Timmer uses network adoption models like Metcalfe's Law, which states that a network's value is proportional to the square of its users. Based on Bitcoin's adoption curve, he projects its price could steadily grow to about $1 million by 2030. Fidelity's deep involvement in crypto lends significant weight to this forecast. As an early Bitcoin entrepreneur who co-founded one of China's first crypto exchanges, BTCC, Bobby Lee has witnessed Bitcoin's entire history. His optimism is forged from seeing Bitcoin survive and thrive through multiple market cycles. Liew told Bloomberg that Bitcoin could surpass $1 million by 2029 or 2030. He believes it will require one more halving cycle and bull run, after the current one, to reach that milestone. His confidence is rooted in Bitcoin's fixed supply and growing global appeal among individuals, institutions, and even nations. Perhaps no one has put more corporate money where their mouth is than Michael Saylor, the executive chairman of MicroStrategy. His company has accumulated billions of dollars worth of Bitcoin, reflecting an unwavering conviction in its future. While Saylor's grandest predictions extend further, they imply a massive valuation by 2030. He has suggested Bitcoin could reach $13 million by 2045. For the 2030 horizon, he has hinted that a price of over $1 million is easily achievable as Bitcoin becomes a dominant global store of value. The pseudonymous quantitative analyst known as PlanB gained fame for the stock-to-flow (S2F) model, which correlates Bitcoin's price with its scarcity. Though the model has faced criticism for missing recent targets, it remains a key reference for many long-term bulls. The S2F model has, at times, predicted prices around $1 million near 2025 or 2026. In 2024, PlanB still suggested a target of $800,000 by 2025. If this trajectory were to hold, seven-figure prices by 2030 would be a logical extension. Though even PlanB admits such forecasts are ambitious. These sky-high predictions are not random guesses. They are built on a shared set of fundamental beliefs about where the world is heading and Bitcoin's role within it. Central to the bull case is the idea of Bitcoin as digital gold. Proponents like Cathie Wood and the Winklevoss twins argue that Bitcoin will capture a significant share of gold's approximately $13 trillion market cap. Given Bitcoin's limited supply, this alone implies a price in the hundreds of thousands, if not more. The magic number is 21 million, the maximum number of Bitcoin that will ever exist. Bulls contend that as global assets, corporate treasuries, and even central banks begin to seek a safe haven, even a tiny percentage flowing into a supply-capped asset will cause its price to explode. The bulls also point to maturing infrastructure as a key driver. The approval of Bitcoin ETFs, the development of custodians for institutional funds, and the growth of scaling solutions like the Lightning Network are all signs that Bitcoin is graduating from a niche tech experiment to a legitimate financial asset. Finally, there is a generational aspect. Younger investors who have grown up in a digital world may naturally prefer a digital store of value over a physical one. This shift in preference, combined with ongoing concerns about inflation and government debt, makes an independent digital asset increasingly appealing. However, even the most ardent bulls admit these are best-case scenarios. Reaching $1 million or more by 2030 would likely require a perfect storm of positive drivers: sustained institutional buying, favorable macroeconomics, and no major regulatory or technological disasters. The vision is clear, but the path is not guaranteed. Not everyone is forecasting seven-figure price tags. A larger camp of experts, including analysts at major banks, see a very bright but more grounded future for Bitcoin, with targets comfortably in the six-figure range by 2030. Tyler and Cameron Winklevoss, the founders of the Gemini Exchange and early Bitcoin billionaires, are famous for their Gold 2.0 thesis. They argue that Bitcoin is superior to gold in almost every way as a store of value. In a detailed thesis, they reasoned that if Bitcoin simply achieves parity with gold's market capitalization, it could be worth $500,000 per coin. While not tied to an exact year, many see this as a plausible target for the 2030 timeframe, representing Bitcoin's maturation into a globally recognized store of value. Back in 2017, when Bitcoin was still under $5,000, venture capitalist Jeremy Liew, Snapchat's first investor, made a bold prediction. He approached Bitcoin's potential like a tech startup, focusing on user growth as the primary driver of value. Liew, along with Blockchain.com's co-founder, predicted Bitcoin would reach $500,000 by 2030. Their calculation was based on the network growing to 400 million users and capturing a market cap of around $10 trillion, similar to gold. They saw its use in remittances and as a safe haven in unstable economies as key adoption vectors. Even at JPMorgan Chase, whose CEO is a vocal skeptic, the bank's own strategists see potential. In a 2021 report, they analyzed Bitcoin's long-term prospects as it competes with gold for investor allocation. The bank's analysts stated that Bitcoin has the potential to reach $146,000 in the long term if its market cap matches the private sector's investment in gold. More recently, they floated a slightly more modest figure of around $130,000, contingent on its volatility decreasing to a level where institutions feel comfortable holding it. The respected ETF provider WisdomTree also weighed in with an in-depth analysis. They treated Bitcoin as a macro asset, modeling its future price based on different economic scenarios, such as inflation and global money supply growth. WisdomTree's base case projects a Bitcoin price of around $250,000 by the end of 2030. This scenario assumes moderate inflation and that Bitcoin's share of the hard money market, which includes gold, rises to 15%. This provides a solid middle ground forecast grounded in traditional asset modeling. Interestingly, WisdomTree also modeled a high inflation case. If money printing accelerates and investors flock to hard assets, their model shows Bitcoin could exceed $500,000 by 2030. Conversely, a deflationary world with tight monetary policy still saw Bitcoin appreciating to around $120,000. At Bloomberg Intelligence, senior commodity strategist Mike McGlone has long tracked Bitcoin's adoption curve. His outlook is optimistic but measured, often cautioning about short-term volatility while maintaining a positive long-term view. McGlone estimates Bitcoin will reach $100,000 by 2030, citing the simple economic fundamentals of rising demand meeting a fixed, inelastic supply. While he warns of potential pullbacks along the way, his long-run forecast reflects a belief that Bitcoin will continue to mature and appreciate, albeit without the hyperbolic leaps others predict. This moderate six-figure range is echoed by a number of other influential investors. Figures like former Goldman Sachs executive Raoul Pal, hedge fund manager Mark Yusko, and Galaxy Digital CEO Mike Novogratz have all, at various times, pointed to prices in the $250,000 to $500,000 range as a plausible long-term target. The common thread for these moderate predictions is a simple, powerful idea. Bitcoin doesn't need to take over the world. It just needs to take its place alongside gold as a legitimate alternative store of value. The market capitalization of gold hovers around $10 to $13 trillion. If Bitcoin, with its 21 million coin supply, were to capture just a fraction of that, the price math is straightforward. A $2.1 trillion market cap would mean a price of $100,000, while a $10.5 trillion cap would equal $500,000 per coin. Crucially, these forecasts don't require Bitcoin to replace national currencies. They hinge on continued institutional adoption, favorable regulation, and macro conditions that encourage investors to seek inflation hedges. The fact that analysts at firms like JPMorgan and WisdomTree are modeling these outcomes is a powerful sign of Bitcoin's growing acceptance in traditional finance. On the opposite end of the spectrum are the staunch skeptics, a formidable group of economists, legendary investors, and financial veterans warn that Bitcoin is a bubble built on nothing, and that its future value could be a fraction of today's price, or even zero. One of Bitcoin's most prominent critics is Jamie Dimon, the longtime CEO of JPMorgan Chase. He has consistently dismissed Bitcoin, using terms like worthless and a hyped-up fraud, and believes governments should have cracked down on it long ago. Dimon's view for 2030 is unambiguous. He has stated that Bitcoin could still drop to zero because it is inherently worthless. While his own bank's analysts explore upside scenarios, the man at the top remains convinced that the entire crypto space will end badly for investors. Economist Nouriel Roubini, who earned the nickname Dr. Doom for predicting the 2008 financial crisis, is another outspoken critic. He has argued that nearly all cryptocurrencies are scams, and that Bitcoin itself has no intrinsic value or utility. As far back as 2018, Roubini predicted Bitcoin could crash to zero. His bearishness is rooted in the belief that it is a purely speculative asset bubble. By 2030, he expects it will either be regulated into oblivion or replaced by more efficient central bank digital currencies, fading away as financial noise. Kenneth Rogoff, a Harvard economist and former chief economist at the IMF, made a stark prediction in 2018. As a scholar of currency history, he sees government intervention as the ultimate threat to private digital currencies. Rogoff famously stated that a decade from 2018, Bitcoin was more likely to be $100 than $100,000. He argued that governments would eventually clamp down on its anonymous use cases, shrinking its utility. While the price has defied his predictions so far, his skepticism about its long-run viability remains, encapsulated by that memorable quote. Billionaire investor John Paulson, who made his fortune by shorting the subprime mortgage bubble, sees clear parallels in the crypto world. He has bluntly described cryptocurrencies as a worthless bubble and a limited supply of nothing. Paulson predicts that regardless of where cryptos are trading today, they will eventually prove to be worthless. Coming from an investor famous for identifying and profiting from financial manias, his warning is stark. By 2030, his view implies, the bubble will have long since popped. Perhaps the most famous Bitcoin detractors are the legendary investors Warren Buffett and his late partner Charlie Munger of Berkshire Hathaway. Their criticisms are rooted in their core philosophy of value investing, buying productive assets that generate cash flow. Buffett has famously called Bitcoin probably rat poison squared, stating it has no unique value at all and is basically a mirage. Munger was even more acerbic, calling crypto trading just dementia. They see Bitcoin as a non-productive, speculative asset with no intrinsic worth, destined for a bad end. Beyond individuals, institutional bodies like the European Central Bank have also expressed deep skepticism. In a 2022 blog post, the ECB declared Bitcoin was on a road to irrelevance, comparing its price swings to the tulip mania of the 17th century. Many central bankers and regulators hint that by 2030, Bitcoin's role could be usurped by official central bank digital currencies, or CBDCs. They argue that sovereign money will always prevail, and a global regulatory clampdown could decimate Bitcoin's price, potentially pushing it below $10,000 or even toward zero. The bearish arguments all converge on a few key points. They see Bitcoin's story not as a financial revolution, but as a classic tale of speculative mania, destined to end in tears. History is littered with bubbles, from the Dutch tulip craze to the dot-com crash. Bears argue that Bitcoin's parabolic run-ups and subsequent 80 to 90% crashes are classic hallmarks of a speculative bubble with no reliable value floor. Once the speculative fever breaks for good, they ask, who will be left to buy? The biggest threat, cited even by bulls, is regulation. Bears believe it's not a matter of if, but when, governments will impose strict controls, heavy taxation, or even outright bans. This would cripple Bitcoin's utility and demand, causing its price to collapse. At its core, the bearish argument is that Bitcoin produces no cash flow, has no earnings, and its utility is limited. Unlike a stock which represents a share in a productive company, or a bond which pays interest, Bitcoin's value is derived solely from what the next person is willing to pay for it, the greater fool theory. While it's true that many of these skeptics have been predicting Bitcoin's demise for years, their warnings serve as a crucial counterpoint to the unbridled optimism of the bulls. They remind investors that the downside risk is severe and that a complete loss of investment, while perhaps a tail risk, is not an impossible outcome. So we have the bulls dreaming of millions and the bears warning of zero. Where does this leave us? Is there a consensus to be found? Or a balanced analysis that can point to the most likely outcome by 2030? The first thing to acknowledge is that there is no true consensus. The predictions are a reflection of fundamentally different philosophies about technology, economics, and the future of money. The gap between a $3.8 million target and a $0 target is too vast to bridge. However, if we filter out the most extreme predictions on both ends, a median outlook begins to emerge. Many credible analysts from firms like WisdomTree, JPMorgan, and Bloomberg gravitate toward a price in the low to mid six figures, perhaps in the $200,000 to $500,000 range. This implies Bitcoin successfully matures into a digital gold-like asset. For the million-dollar-plus predictions to come true, a series of bullish events must align. This includes massive institutional allocation, continued debasement of fiat currencies, global regulatory clarity, and major technological scaling. The launch of Bitcoin ETFs is seen as the first major domino to fall in this potential cascade. Conversely, for the bear case to play out, several negative catalysts could occur. A coordinated global regulatory ban, a major technical flaw discovered in the code, the rise of a superior digital currency, or persistent ESG concerns could all stifle adoption and send the price spiraling downwards. Interestingly, both bulls and bears agree on the factors that will decide Bitcoin's fate. They all point to institutional adoption, regulation, and the macroeconomic environment as the key variables. They simply have opposite expectations for how these variables will play out. Taking a middle-of-the-road stance, a plausible scenario for 2030 is that Bitcoin successfully entrenches itself as digital gold. It becomes a multi-trillion-dollar asset class, a common feature in diversified portfolios. But it doesn't replace the US dollar. This would support a price in the hundreds of thousands, a significant appreciation from today. However, we must remember that Bitcoin has consistently surprised everyone. Few predicted its rise to $20,000 in 2017. and even fewer foresaw its surge to nearly $70,000 in 2021 after a brutal crash. To make a single-point forecast for 2030 is a fool's errand. The key is to understand the range of possibilities. Ultimately, the predictions for 2030 tell us less about a certain future and more about these experts' core beliefs. The bulls see a technological and financial revolution. The bears see a speculative fad, another chapter in the long history of financial manias. The truth will be revealed, not by analysis, but by time. The coming years will determine whether Bitcoin becomes a global reserve asset worth millions, a stable but more modest store of value, or a cautionary tale taught in economics classes. Prudent analysis suggests preparing for all of these outcomes. Cathie Wood and ARK Invest are betting on a future where Bitcoin integrates into every facet of the economy, from corporate treasuries to emerging market safe havens, leading to a multi-million-dollar valuation. They see the current system as fragile and Bitcoin as the robust alternative. JPMorgan's analysts represent the pragmatic institutional view. They see Bitcoin's potential capped by gold's role in the financial system. A six-figure price is feasible, but only if Bitcoin can tame its volatility and earn the trust of the world's largest money managers. Jamie Dimon, on the other hand, sees no redeeming qualities. To him, it's a tool for illicit activity and speculation with no underlying value. His prediction is a stark reminder of the deep-seated skepticism within the traditional banking establishment. The Winklevoss twins offer a clear, compelling narrative. Bitcoin is simply better gold. Their $500,000 target is a direct calculation based on Bitcoin supplanting gold as the preferred store of value for a new, digitally native generation. Economist Nouriel Roubini views the entire space through the lens of economic fundamentals and historical bubbles. Seeing none of the former and all the signs of the latter, he concludes that Bitcoin's eventual value will trend towards its intrinsic value, which he argues is zero. Warren Buffett's critique is perhaps the most fundamental. As an investor who buys businesses, he sees nothing to buy in Bitcoin. It's an object of speculation, not an engine of production. And in his worldview, such things rarely end well for those who hold them long-term. From a seven-figure digital messiah to a worthless digital tulip, the range of expert opinion is vast. The only certainty is that the journey to 2030 will be volatile, fascinating, and will undoubtedly shape the future of finance in ways we can only begin to imagine. Thank you for watching this deep dive into the future of Bitcoin. It's a complex topic with passionate arguments on all sides, and we hope this breakdown has helped you understand the different perspectives. Now we want to hear from you. Are you a bull, a bear, or somewhere in between? Let us know your Bitcoin price prediction for 2030 in the comments below. We read every single one. If you enjoyed this exploration and want more content that unravels the biggest riddles of our world, please hit the like button, subscribe to Riddle of Truth, and ring the bell so you never miss an episode. Until next time, stay curious.